Assalamualaikum warahmatullahi wabarakatuh. Good afternoon, ma'am and friends. In this lovely afternoon, we would like to present our group final discussion about formula for calculating financial data. But before we jump into the topic, I would like to introduce myself. My name is Shafa Azzahra, as the one who's going to moderate today's presentations, and my fellow teammates, Afifah Rabbani, Nabila Khairunnisa, and Handika Leswari. As for today's topic, we would like to discuss 5 ratios or 5 formula, which are quick ratio formula, net working formula, total asset turnover formula, gross profit margin formula, and return on total asset formula. As for the first one is quick ratio formula. Quick ratio formula or the exit test or liquidity ratio measures the ability of a business to pay its short-term liabilities by having assets that are readily convertible into cash, while it measures a company's capacity to pay its current liabilities without needing to sell its inventory or obtain additional financing. The higher ratio result means a company's liquidity and financial health, while the lower the ratio equals to the company will struggle with paying debts. As for the formula of the quick ratio, is the cash added by receivables and marketable securities and divided by current liabilities, or it also can be calculated by current assets minus or deducted by inventories and deducted by prepayments and divided by current liabilities. As for the next topic, which is the net working capital, will be explained by Nabila Handika. To Nabila Handika, the time is yours.
Okay, thank you, Safa. The next topic is net working capital. Definition of net working capital. It is a measure of a company's liquidity and its ability to meet short-term obligations as well as fund operations of the business. The function of net working capital, a positive working capital means the business can allocate the excess amount for operation optimization. A deficit in working capital, however, calls for capital infusion in the business to maintain liquidity. The formula of net working capital is current asset minus current liabilities. The next material will be presented by Nabila Khairunnisa.
Okay, thank you, Nabila. The next one is total asset turnover. Definition of total asset turnover is the sale or revenue to average asset. This metric helps investors understand how effectively companies are using their assets to generate sale, while the function of total asset turnover can be used as an indicator of the efficiency with which a company is using its assets to generate revenue. The higher the asset turnover ratio, the more efficient a company is at generating revenue from its assets. While the formula of total asset turnover is net sales dividing by average total assets. Then the next one is gross profit margin. Gross profit margin is the ratio used to measure the percentage of gross profit on sales revenue. This ratio is a measure of the company's level of efficiency in producing and generating profits. If the ratio shows that the cost of goods sold is lower than the sales figure, the more efficient the company's operational activities will be and vice versa. So formula of gross profit margin is gross profit divided by net sales, but we should looking for gross profit by net sales minus cost of goods sold. The next one is will be presented by Afifah.
Fifth, return on total asset. Definition of return on total asset. Return on total asset or ROTA. ROTA is a ratio that measures a company's earnings before interest and taxes, or EBIT, relative to its total net assets. Function of return on total asset. The return on assets ratio, or ROA, measures how efficiently a company can manage its assets to produce profits during a period. Limitation of return on total asset. Since the ROTA formula uses the book values of assets from the balance sheet, it may be significantly understating the fixed asset's actual market value. If a debt was used to buy an asset, the ROTA could look favorable, while the company may actually be having trouble making its interest expense payments. The formula of return on total assets is net income divided by average total assets. This ratio can also be represented as a product of the profit margin and the total asset turnover. So here's the example. The data that shows balance sheet and income statement. All the formula we can use lookup function to make it easier. But first, we should arrange it based on alphabet. Then lookup formula, click the cell that we're looking for, then semicolon, then block the data the data vector, semicolon again, then block the data that show the result, and here it is. And then we also apply the lookup formula for the other calculation in Excel. I think that's all from me. Back to our moderator.
Thank you, Afifah. I think that's wrap up the whole discussion of our group. Thank you for all the attention. Wassalamualaikum warahmatullahi wabarakatuh.